Hello, ladies and gentlemen. This is Vincent Verga, president of PFS Wealth Management Group. You're probably wondering, what the heck is Vince doing dressed casual? Well, I just got back from, believe it or not, Capitol Hill. No, not for the whole FBI Comey investigation and all the chaos that's going on in Washington, D.C. As a matter of fact, I just returned back. I was asked to serve on the advisory council of the Financial Services Institute. It's an organization and an advocacy group that actually works on behalf of Main Street consumers, fighting for and communicating and working with the government to provide investors like yourself with low-cost, objective investment opportunities and options. So I just wanted to let you know, I wanted to make sure we got this video in and out to you as soon as possible. So that's why I literally just got back from Washington, D.C. So now, with all that being said, I want to start with our June 2017 economic update. See, in this month's video, we're going to talk about some of the major headlines that influenced markets in May. We hope this information offers insight into what these developments might mean for you as an investor. But please, as you always know, please stay tuned at the end of this video for our required disclosure statement. Well, the economy has sped up a bit during the spring. In April, the consumer spending rose by 0.4%. It's the biggest gain since December. Spending was aided by rising incomes and tax refunds. Lower inflation reflected in decreasing oil prices, also giving households an extra bolster. Even with the curb in inflation, the Federal Reserve sent a strong signal on June 1st that it will raise interest rates in June and soon beginning shedding some of its $4.5 trillion in bond holdings. Experts give little indication that the U.S. economy will reach its 3% growth this year, with healthcare and tax reforms still stymied in Congress. There are expected surges in infrastructure spending, though. According to the Fed's recently released Beige Book, a summary of economic conditions in the United States by the Federal Reserve District showed that falling prices for certain final goods, including groceries, apparel, and autos. Job creation also surged in May due to what? A jump in construction positions and a boom in professional and business services. Private payrolls increased by 253,000 and ahead of expectations. Economists expect the report to show that private payrolls grew by 185,000 in May from 174,000 in April. Experts predict that the unemployment rate now at 4.4% is heading to 4%. Even with all the uncertainty, the Dow, the S&P, and the NASDAQ were all on track to post monthly gains. Tech-heavy NASDAQ gained 2.5 in May and posted a 7-month winning streak in its longest since 2013. The Dow, the S&P 500, and NASDAQ closed lower on May 31st after financials dropped 0.1%. Treasury yields fell steeply compared to where they began trading in 2017. On May 31st, the benchmark 10-year yield hung at around 2.19. It started the year at 2.5%. The Chicago Board Options Exchange Volatility Index, or VIX, which is widely considered the best gauge of fear in the market, traded near 10.4%. The Commerce Department said durable good orders fell 0.7% in April after rising 2.3% in March. This was the first downturn since durable goods orders fell 4.6% in November. Orders for transportation equipment fell 1.2%, pulled down by a 9.2% drop in orders for civilian aircraft. The Consumer Confidence Index, which previously decreased in April, fell again in May. But U.S. consumers are still optimistic overall. The index now stands at about 117.9, mostly in line with what economists expected for May. The Consumer Confidence Index last fell to 120.3 in April after hitting 125 in March. It's the highest level since December 2000. Economists closely watch the mood of consumers because their spending makes up about 70% of the U.S. economic activity. In the coming month, we will be watching the second quarter. Though economists are all over the place regarding how much improvement will occur, the overall outlook is expected to improve. We will also keep a close watch on how decisions concerning the Paris Accord on climate change may affect trade with other countries. If you want more guidance on approaching your financial needs or balancing your assets and liabilities in this current environment, we are here to talk to you. Give our office a call and we'd be more than happy to touch base and provide further clarity. Ladies and gentlemen, I know we covered a lot today, but guess what? That's it for our month's economic educational update. We'll see you again next month in June. Here are some of the upcoming events I wanted to make sure we let you know about. Our Smart Approach seminar series will be held at Rod's Steakhouse and Seafood Grill on Tuesday, June 13th and June 15th. Please contact our office or visit our website at pfswealthgroup.com to register. Once again, I'm Vincent Verga with PFS Wealth Management Group, signing off for the month of June 2017, and I also be on the lookout for an email from me regarding a blog and a summary of my visit to Capitol Hill and some of the initiatives that we're working on with the Financial Services Institute. That being said, ladies and gentlemen, I want to thank you once again. See you next month.